Welcome to the Property Podcast. Here we talk about property law, property rights, and property investment. We unpack it all, turning you into a property guru. Today, turning you into a property guru is Bev. Bev, how are you today?
I'm very good. Thank you, Rose. Thank you for the opportunity to be here and to actually hopefully educate everybody a little bit more.
It's for selfish reasons because I love educating people, but also I love talking about property in general. So this is just going to be us educating the public, educating people on property and everything that has to do with financing property and bond originators. Because a lot of people don't even know what a bond originator is, and I'm not going to ruin it for them. I'm going to ask you, the specialist in the field, what is a bond originator? What do you do?
What do I do?
Yeah.
So what a bond originator does is they sort of take place of a bank consultant.
Okay.
But instead of you going into the bank yourself and going into maybe your own bank where you've been for years and you know everybody, they're going to offer you a deal.
Okay.
You don't know if you're getting the best deal.
Okay.
What we do is we take the paperwork and we submit it to 5 major banks and we get 5 deals.
Okay.
And we do all that paperwork.
Yes.
And that's for free. And then we compare, and it gives us a real opportunity to barter. So at the end of the day, you might get 4 offers and you have a choice whether you've been offered a 90% loan, 100% loan, and also the rate.
Yes, the
So we
interest rate.
barter for the better rate, because if you are a good client,
Yeah.
the banks will barter for that, and they'll barter till the end. So we can really knock thousands off what you pay for the term of the loan.
So you do an application from one set of documents.
Yes.
You only require the person to fill the documents once,
Yes.
and then you send it out to different banks, and those banks will reply. But what have you seen has been as the reason why a lot of people get rejected for a bond, for an example? Because I'm sure you've seen a few people where you submit everything that's been required, and then the banks, like all the banks, are like, no, we're not going to finance this one. What have you seen as the common mistakes that make people unbondable?
Unbondable?
Yeah.
All right, look, the main reason has got to be the credit bureau.
Okay.
And we check the credit bureau first. And there can be a tiny item on the credit bureau that you've maybe overlooked. But then when it pops up at the bank, when the documents are submitted, it will immediately be rejected, because there's a first step that it goes through in the process. And if there's anything that pops up, it will be rejected. What we do is, beforehand, we've checked that credit bureau and we've seen what's going on. And in a recent example, we had a gentleman who had a dispute with MTN years ago, received a cell phone, wasn't what he wanted, sent the cell phone back, but they wouldn't take him off the contract.
Oh.
And so there was a dispute.
Yes.
He paid the dispute, he paid it, he paid what he had to,
Yes.
and he settled it, but it was still showing on the bureau. So we helped him to get over that stage,
Yes.
and then we moved on. So it all starts there, and those are the biggest hindrances.
So when you say the credit bureau, you're basically referring to the credit score, the credit checks.
It's the credit check.
Yes.
You get a score. It's not so much the score, it's what's on there. But also what shows on there is how much contractual debt you already have.
Yes.
What is contractual debt?
Okay.
Contractual debt is a home loan, a car, a credit card, a personal loan. So there's a parameter on how much you can have in contractual debt.
Okay.
So as a simple example, if someone's earning 10,000 Rand, no more than 5,000 Rand, 50% of that can go on contractual debt. That is determined by the National Credit Act, not by the banks.
Okay.
So they do that to help you get by in life, because the other 50%, the other 5,000 Rand, would be for school fees, petrol, groceries. So the bank will not allow you to go over 50%. So we can see what your contractual debt is, and we can say, hold on a minute, you've got a little bit too much, maybe pay off that one little account you've got there,
Okay.
or maybe settle that one you've got there, and we help the people to get into that parameter.
There's this thing that I've had, and I've done it, I think, before, where I go and say, I don't need this credit card anymore, and then I go and close it. How does that affect my application for a bond? I've had a credit card for years, and then I've decided, you know what, I don't need this. I'm paying admin fees. I'm just gonna go and close it. Does that affect my credit score first of all? Does it affect my bondability? Is that even a word?
Of course it does.
Okay.
It does, because you've settled it.
Okay.
So then that will stop coming off on your,
Okay.
on your credit bureau. But it is good to have some debt. Often people get rejected because they've paid everything off and they've got no debt.
Yes.
And then the bank cannot see a track record. Okay, the bank looks at a track record.
Yes.
2, number 1, the way you handle your credit card payments, your personal loan payments. But number 2, they also do a track record on your account.
Okay.
How are you monitoring your account?
Yes.
You might not think it's important to just go overdrawn a little bit. You might not worry about that debit order that goes through,
Yes.
and there's not quite enough money for the item to go through.
Yeah.
That reduces your score. So the banks have got an external credit score, but there's also an internal credit score.
Yeah.
So it's also the way you handle your bank account. But to settle a credit card is good,
Okay.
because then that's less debt coming off.
Yes.
But it takes sometimes can take 2 to 3 months to show on the credit bureau.
Okay.
So you need proof that you've done
That
that.
you've settled it, yes.
Best thing to do is get a letter to say you've settled this.
Should everyone who qualifies for a loan on the books practically apply for a loan? Should everyone who qualifies in terms of how much they earn, should everyone who, do you get what I'm trying to say? Because sometimes I know it says a loan should be a third at most of your salary.
Yes.
So you are earning 15,000 rands, you see a property for 500,000 rands, the repayments are going to be 5,000 rands, right?
Yes.
Like, okay, I qualify for this.
Yes.
But should everyone who qualifies on the book actually go and get a bond?
Actually go and get a bond. It's a very good question, because are those people spending money on rent?
Okay.
All right, so
yes.
they're renting a property. That money could be going towards their own property. But it also depends
Okay.
if they have saved enough and sufficient enough to pay for fees. But they can get help from the banks in that instance, because a lot of the banks are giving extra to help with that.
Yeah.
So some banks are giving you 104% loan. Some banks will give you 108% loan to help you to pay for those fees.
Okay.
But also, the government are helping some people that are on the lower salary spectrum.
Yes.
So they help them with the loan called FLISP,
Okay.
which is your financial loan independent subsidy program, where the government will give them money. The government doesn't hand the money to them, but the government will pay that money to the attorneys. So they first have to qualify for a bond.
Okay.
So they first got to do the workings out. How much would they qualify? Have they found a place that they'd like to buy?
Yes.
They make an offer. We first deem if they can get FLISP, and then what we can do is work out what the qualification is. They qualify for this bond. Then, if they get FLISP, this is how much they will get. There's a parameter, and then that money would pay to the attorney, would reduce their monthly repayment on the bond.
So you do a lot of FLISP applications, and do you get a lot of success with it? Because I'll tell you what, I made a video about it and it had a positive response. Obviously, people want money to buy property, money to invest in property. They want to buy homes, and RDP houses have not really been a success. A lot of people don't get the RDP and they don't even qualify. But what I'm asking is, with the applications that you've done, FLISP applications, have you seen a lot of success? What are some of the things that you've seen as obstacles to people getting the FLISP first home finance?
Okay.
Yes.
So, the parameters are, obviously you've got to be South African,
Okay.
and you've got to be over 18.
Yes.
And then you've either got to be single with a dependent. So if you're
make
single,
babies.
you've got to be single with a dependent.
Okay.
I mean, you could though also be looking after a granny or something, but
So
you've
that
got to
counts?
have proof.
Okay.
Okay, that you've got a dependent. All
But
right.
when you say proof, what are we talking about?
Well, I mean, if you've got a child,
Yes.
you've got a child.
That's obvious, but I'm talking in the context
There are
of a
certain documents that
grandparent.
they can get to say that this person is under your care,
Okay.
and you are responsible for them.
Yes.
Okay.
Yeah.
But then there's also, people can also apply for FLISP if they are married or cohabiting.
Nyabake nikipit.
But by cohabiting, they've got to prove that they are cohabiting. So
Okay.
they've got to have been together for so long, but the income stays the same. So your income parameter is between 3,500 and 22,000 rand a month.
So even for bonds, it seems like life is hard for single people.
Life
we
is
should
hard.
get-
Life is hard for single people.
Okay, but do you feel like sometimes we do oversell the home ownership? Do you feel like there's instances where, as a person, you should just rent? Where it's more feasible to rent than to buy a property. I mean, I know that's why we're here today.
Yes.
That's why we make this video, to encourage people to buy property and how to get the finance and all of that. But do you feel like there are instances where a person should rather rent instead of buying?
Of course there are, Rose. I mean, you can rent. It depends on what your long-term vision is. What are you planning to do in the future?
Okay.
If you're planning to stay in the country for a long time and you're here
Yes.
and you're renting, why not buy your own property? Because it can become an investment. All right?
Yes.
If you save up enough and you buy a property, so you would have to pay the attorney fees, all right, which are roughly 6% of the value, but they can knock that down a bit. All right.
Okay.
And then if you save enough, so you might be living with parents.
Yes.
Save money. It's the best thing you can do. You can do it, because if you can put down a little deposit, you could get somebody else in that property to let it.
Yes.
And that person is paying off that property for you. You then are gaining an asset which is increasing in value, but somebody else is paying it off for you. So it's really good for young people to realize this and realize that it is a good way to invest.
And what is the most challenging bond that you've ever had to do? Like, if you were to pick one in your career, how long have you been in the game for?
I've been in the game for many, many years.
How
I
many
was
years?
at Nedbank for 30 years.
Okay.
I wasn't doing home loans for all that time, but let's say I've been actively doing lending
Okay.
on the property side, let's say for the past 20 years.
20 years, okay.
Yeah. So now, of course, I'm on my own doing it.
Yes.
And the most challenging ones, they're definitely self-employed, because people haven't got their financials ready.
What does that mean? Like, having your financials ready? Do you mean the annual financial statements that are done by an accountant, or do you mean just the records of what goes on with the business, money coming in, money going out, the invoicing? What do you mean? Do you need the actual annual financial statement?
Yes, it depends what type of business you've got.
Okay.
If you've just got a sole proprietor,
Yes.
right, and your business running on your own, then you can record your incoming and outgoing. But you must have, if you're doing business, you must have invoices. You must have something to show where the money's coming from. And then you must be able to do a simple balance sheet,
Yeah.
income and expenditure. But if you've registered a business like a CC or a PTY, you have to do financials once a year.
Okay.
And a lot of people are known to do financials and obviously don't want to show a lot of income because they pay tax.
Yes.
All right.
Yeah.
But you've got to think about it. If you want the bank to loan you money, you've got to prove you're earning that much. So you've got to show what you're earning.
Yes.
So you've got to discuss it first. So the biggest challenge I had was doing a property on the North Coast. And the person definitely had the affordability,
Yes.
but they weren't they weren't drawing an income out of the property because it wasn't necessary.
Yes.
All right, but now we had to prove affordability. So we basically had to move from late year November and say, right, then we're going to actually carry this through to the January and the February, and in this February, your financials are going to look like this.
Yeah.
So you're going to have to draw a bigger salary, because ultimately, even when you're doing it in the name of a business, you're signing personal surety.
So as a bond originator, do you assist me through that process? Do you coach me through it? Do you tell me all these things? Or when should I come to you when should I go to a bond originator and go, hey, I'm thinking of buying a property. Should it be after I've looked at the property, or should it be before I look at the property? So that, because I'm hearing all these things that you're telling me now, I'm like, it seems like there's a lot that you do, but is this something that generally bond originators do? Is it something you do because you're a bond originator, or is it something you do because you BEV?
All right. So you've got a lot of bond originators or that actually work inside estate agents.
Okay.
And then they apply when the person's applied for the bond.
Yes.
To me, unless you've done the figures before, that's almost too late.
Okay.
The minute you're thinking of buying property, you need to be guided.
Okay.
You need someone to look at you and say, you're in the right direction. Let's check your credit bureau.
Yes.
How much have you got surplus? Is this okay? What is your salary? Do you qualify for the bond? Do you have to wait for your next salary increase? So the minute you're thinking of buying property, you should get hold of someone that can help you in the process so that it becomes a smooth transition when you do it.
Yeah.
By the time somebody gives me an offer to purchase, we've got all the work done.
Yes.
The offer to purchase is the last thing, and then it sails through.
And if I were buying my first property now, thinking of buying my first ever property, I'm young, 22, very young. Anyways, I'm thinking of buying a property. What's the one advice that you would give me? What's the one major advice you would say, do this, Rose?
What you have to do, Rose, is just make sure that it is affordable to you. You don't want to overstretch yourself.
Okay.
You don't want to put more in because you don't know what's going to happen. You still need money for, everybody should have the money for now and the money for unforeseen expenses. So you don't want to overstretch yourself and put everything into it.
Yes.
And what you should be doing now is you should be trying to save so that you've got enough to pay for fees, because the bank can loan you money for fees, but the bank's giving you extra than the offer to purchase amount.
Yes.
So there's more risk taken by the bank.
Yeah.
So therefore the rate may increase.
Oh.
You understand what I'm saying? So
yeah.
if you can actually do with 100% loan, or if you can put a little deposit down, then you'll get a better rate.
Yes.
And over the long term, that's obviously better for you. But don't overstretch yourself.
Yes.
And you need someone to help you work out that's how much you can spend on a bond. And it is right. About 30% of your income is maximum what you can spend on the bond.
On the bond, okay.
Yeah. Some banks tend to look at the gross income. Some banks tend to look at the net income. So there's a bit of a disparity there.
So they're not sure.
So we have to work out the best.
Yes.
And the affordability. And that's what we're good at, and that's what we do.
There's also something I experienced personally doing an application, and we do the application and they look and I think we could afford. I want to say we could afford. Our lease agreements had expired, and what we didn't do is we didn't go and renew our leases. So we have the same tenants. The leases are self-renewing every year because it says on the clauses of that lease. But because we hadn't renewed the lease, we hadn't signed new leases, the bank looked at the old leases and they said, well, we can't finance you based on these leases. And we did have the lease agreements, we did have bank statements, we did have annual financial statements, we had all of that. But the bank said, these lease agreements, we can't be sure that they still valid, even though there was money coming into the account.
I can guarantee you that I've done several with lease agreements.
Okay.
And I've managed to get everyone through. And yes, you can renew a lease agreement, and even if some people let them lapse because it is year on year.
Yes.
You can quickly draw up a new one and have the client sign it.
Yes.
So, that's what you can do. But remember, with incoming rentals, not all the banks take the same. Some banks will take 50% of that income. Some banks will take 70% of that income.
Is it because people exaggerate the income?
Well, it's a risk because you might not get that rental month.
Okay.
You don't know if that person is overstretched and might not pay his rental 1 month.
Okay.
So the bank will not take 100% of the rental income. They only take a certain percentage.
Okay.
And we have to draw up what is called a rental schedule. showing how much rent comes in, what you're paying out of that. You know, are you paying the lights and water out of that?
Yes.
So, you know, what you're getting out of that, and then how long the lease is, you know, and so they look at that. But usually I've managed to get everyone through with good leases. And if you haven't got one, if it's been ongoing, then you quickly draw one up and you get the person to sign it.
Yeah, but sometimes it's like, it's difficult, especially,
difficult.
yeah, sometimes just, I mean, what if,
Sorry,
I don't
Rose,
know,
you weren't dealing with Beverly.
I know better now. I know better now. But just any other general advice that you can give someone who wants to buy property? And I mean, we talked about property a lot, but we've spoken mostly about residential property.
Yeah.
Yeah, but in terms of commercial property, what is the difference now between when you want money to finance residential property and when you want money for commercial property?
All right, so commercial property can be broken down. You can have commercial property in terms of like a doctor or a dentist where they're working from a residential house. So we get like, there's a small business loan that one can get when that property can actually be turned back into a residential property.
Okay.
So, you know, there's a bank that does that very nicely. And we do a lot of those.
Okay.
When you're talking business, when you're talking buildings, then yes, you're talking proper commercial finance.
Yes.
And the biggest difference with that, with commercial finance, are also it's the parameters when you come to repay. So a residential loan, you're paying over 25 years.
Yes.
A commercial loan is between 10 and 15 years max. So you're paying it over a much shorter period. So your repayments are a lot higher.
Yes, yeah.
Okay. And also a lot of banks will only give you like 70% on a commercial loan. So you have to have a lot of money in yourself. You've got to have a lot of money up front to put down. So, you know, they're taking a risk on the business as well as the property.
Yeah.
So that's why it's, you know, they don't give you as much.
So do you need to show that the business is running? Do you need to show that the business is good, the business is running? Or you can show that as Rose Ginya, I have money, I will pay you. How does that work? Do they look at the business itself that, okay, this business will be sustainable? Or do they look at the affordability of the person behind the business?
Rose, they look at both.
Okay.
They obviously look at the business, so they want the business financials.
Yes.
They always ask for 2 years.
Okay.
They want to see the trajectory in how the business has been going.
Yes.
If for the past 2 years the business is coming up and it's obviously got to be making a profit, the bank is not going to lend to a business that's actually running at a loss.
Okay.
And they're not going to lend money to a business that is going downwards. Okay.
Yeah.
But they will also look at you and look at your income and your affordability to stand as surety for that. So, you know, you've got to make sure that your business is profitable, but are you taking enough out of the business
Yes.
to support that? You
Yeah.
understand? But it depends how many directors you've got. Depends how many people are involved in the business. You know, you've got then look at the directorships and their financials. So it can get involved as it gets bigger.
Yeah.
Because obviously the risk to the bank is more.
Yes. But as Beverly, do you have, I don't say your name. I never say Beverly, as Bev. But as Bev, do you do all applications, or is there a cap in terms of I can only do a finance application up to 10 million rands, for an example, or 20 million rands, or 5 million rands? Or does every bond originator just do any amount as long as you just get the deal? Is there a cap in terms of what bond originators can do?
There is a cap in terms of the residential ones that we put through the. We have the bigger origination companies that actually do our processing, and they go to the banks, and the banks have got a cap. So on a lot of residential properties, they would cap a bond at 10 million maybe. If it's residential, 10, 15 million. You can go more, but it goes to a much higher credit.
Okay.
All right, so it's really assessed at a top level. Okay, but then we tend to draw up separate contracts with the separate banks for commercial.
Okay.
So, you know, we sort of have a one-on-one with the banks for commercial lending.
Yes.
So some of the bigger bond origination companies do not do commercial. So we have our own personal contracts with the various banks for commercial. So, We can get small business through some of the banks.
Yes.
And we do deal with the people that we know through doing our residential
Yes,
lending
yeah.
with the banks. But we have our own contracts.
Okay. So you can assist someone who earns 3,800 rands,
Yeah.
and then you can who just wants 100,000 rands, and you can assist someone who wants 10 million rands, 100 million rands. It's
Absolutely.
a whole range of people that
Absolutely.
you get.
We
to
love
deal
the
with.
challenge.
And who's your favorite people to deal with? I mean, no, I should not ask that question because you know why? Because if your favorite people to work with are the people that don't bring big deals, and you would have said it in front of the camera, and but if your people that you would prefer to work with are the people that bring big deals, you don't want to offend the people that come and apply for.
Rose, you know what? I
500,000.
love housing South Africans.
Okay.
All right, you actually get goosebumps because you've got, I did a policeman not so long ago
Yeah.
in a block of flats.
Yes.
He never thought he would own his own property. And I've just done one recently, and it was a big challenge.
Yes.
We started this in September. There was a problem. We ironed out the problem. We got it sorted. It was a fight to the end.
Do you want to tell us what the problem was, or is it going to be too personal
No, it
or
won't be too
specific?
personal.
Okay.
No, it was an item on a credit bureau that had been resolved, but because
Oh.
of that, it was rejected by all the banks.
Yes, yeah.
And then once we presented proof and a letter that it's been resolved, we resubmit.
Yes.
Okay, and we challenge them and say, but look here and look here. Some bank will carry on and say no. Some banks will say, okay, we'll look at it.
Yes.
Some banks would say, well, we'll give you, we want a 10% deposit. And it was a challenge till the end.
Yes.
And in the end, we got this client 100% bond.
100% bond
We-
means
we
that
got
if
it.
the property is $1 million, the bank is betting on you, giving
Yeah.
you the whole $1 million to buy that property.
So from September, from really not looking very good, and the client had been rejected previously, and we worked through it, we pushed, and we managed to get a deal in the end. And
Yeah.
it was touch and go.
Yes.
You know, we had two banks competing, and eventually we got the better deal. And
I just
so-
want to also state, sorry to interrupt you, that two banks, and I think that's one of the things that you don't highlight enough as a bond originator. You have banks, multiple banks, fighting to finance this one
Yeah,
person.
yeah.
And that is the advantage of bond originators who are going directly to your bank. And I just want to ask, in your experience, between a bank that I bank with and other banks, who's likely to give me, if you were to weigh a percentage, who's likely to give me a better deal? My bank or other banks on average? Because personally, my personal experience has been that my bank has never offered me a compelling
rate
rate.
or a deal. like
But
a
I am
compa-
only talking about one person, and you deal with a lot of applications, and I just want to know from your perspective, how has it been?
What happens with the banks is they've also been driven by targets. You might get one banking group that is particularly low on home loans, and they might have a bit of a push.
Okay.
They might offer something special, like they'll pay 50% of the attorney fees or something, or they'll help in some way.
Yes.
But they will offer a really good rate because they're hungry for business at the moment.
Okay,
All right?
yeah.
They differ a lot, Rose, and it can differ from season to season. You can't say. I do have two banks that are always quick on the draw.
Okay.
All right, and also very good with rate. It's actually quite tough for me because there's two of them that are always really in good competition.
Yeah.
And they go right down to the line. And I mean, in terms of rate, so let me just say that in one that I did recently, so one of them, I mean, his own bank offered him, I will say a rate, a 10.98. That's Prime Plus.
Yeah.
I've hardly ever, I don't do Prime Plus, all right?
Sorry, what?
Then yeah, I mean.
You don't?
No, most of mine are Prime or Prime Less, but this was Prime Plus.
So
Not on commercial, this is residential.
yeah, I just want to explain prime plus and prime minus. Or can you explain it for the viewers
Yes,
at home?
so there's a prime lending rate.
Yes,
Okay, which is governed by the Reserve Bank.
yes.
And most bonds are given at prime plus. So the current prime lending rate is 10.25. All right, so that's what you use that, and that is the rate what they use when they are doing the affordability assessment.
Okay.
All right.
Yes.
But if it's a really good bond, everything is like what we call a vanilla deal, where there's a really good salary coming in and there's very less risk.
Yes.
They will give you a good rate. Because
Lower than that.
They want that client. So
10.25.
prime less, lower
Yes.
than, all right.
Yes.
So recently I had a deal where the client's own bank offered him a deal at 10.98, which is prime plus. I had another bank offer him a deal at 9.55.
Which is less than that 10.25.
It's a huge
so
amount
prime
less.
minus,
It's a
yeah.
huge amount less. And when you look at the amount, I think it was a difference of 1,300 rand a month.
Oh wow.
People don't realize.
Yes.
So that's a very good example.
Yeah. So I also love what you said, and I think I didn't emphasize it enough that you love housing South Africa. Like, I love that you do this. Yes, you make money from it. We're not gonna beat around the bush about that. And you need to make a living.
I make money
But there's
not as
also
much
an
as the
element-
estate agents make, but we make money. But also, Rose, what I also like is the fact that I can help anybody in the world anywhere
Yes.
that wants to buy property in South Africa.
Yeah.
So you've got a lot of expat people working outside the country. And they're earning money, but they want to come back and buy here.
Yes.
It's a good place to buy. It really is. And then you've got a lot of youngsters going to work on the yachts.
Yes.
They make a lot of money.
Yeah.
And they want to come back and buy property here.
Yes, yes.
So I can help anybody anywhere in the world that wants to buy property in South Africa.
And that's true
Foreigners,
for every
South Africans, I can help anybody.
And that's true for every bond originator.
Yeah.
Of course, they're going to talk to you because you're here with me, the bond house. But like, I just want people to have the general knowledge of bonds,
Yes.
bond originators, because I feel like you, the unsung heroes. You there, you offer your services for free, and I feel like not enough people know about you. And also what you said, that it would be better if a person came to you before they even started viewing the property, so that they
Exactly.
don't waste their time. They view properties that they can actually afford to buy. And
People
yeah.
getting married, people who've rented for a long time and they're thinking it doesn't really take them a lot to save a little bit of money if they
Yeah.
put it together. Maybe a family member can help them to get the money together. I've had that instance recently where a family member helped them so they could buy their own house.
Yes.
You know, but it really is rewarding. And people often ask me, why do I do it for free? For them.
Yes.
Okay.
Yeah.
I don't charge the client because ultimately I get paid from the bank that ends up doing the bond.
Yes.
So I'm sort of like a bank consultant. We get paid via a big origination company.
Yes.
Okay.
Yeah.
So, but we don't charge the clients anything. We do all of that for free.
I'm just thinking of something now. In terms of partnering to buy property, let's say it's me and then my husband, who doesn't exist for now. But so let's say it's not my husband, a boyfriend, but someone who I'm not legally bound to. Or my
Yes.
brother, yes, my brother. We want to buy property together. How difficult is it to get finance compared to a person buying alone? How does that work? Is it easier to say, okay, let's come together and buy the property? Let's say everything kept constant. Our scores are good, our credit scores are good, our finances are good, but I'm alone. Everything is good. Who's likely to get a lower interest rate? Who's likely to get finance? Do you know that? Is it something that you
Rose,
can...
it's a very good example because you might not be able to afford it on your own, but you might want to go with your brother and buy
Yes,
one.
yeah.
That's not a problem at all. We just do the same. As long as he's earning the money or earning a salary,
Yes.
right? If he's working for himself, then we've got to have financials, all right? But yes, more than one person can buy. It's actually quite a good idea because
Yes.
it can afford you to get onto the property ladder, you know?
But what are the usual risks then that come with that, buying together instead of buying as an individual?
Well, buying together, I think the only thing that you have to be wary of is I think you would have to do an agreement between yourselves if something went sour in the relationship. Okay,
Yeah.
you'd have to come to an agreement. A
But-
separate agreement would have to be would have to be set up?
I'm a Xhosa woman. What's mine is mine. What's yours is mine. What's ours is mine. So I don't need an
Well, on the
agreement.
offer to purchase, it would be joint names.
Okay.
So you know you're buying it jointly. So it would be in both of your names.
Yes.
All right, and then the title deed registered in both
In
names.
both your names.
Yeah.
And it means that the other person cannot sell without the other person if both your names are on the title deed. If a person, especially nurses at home, you like doing this, but if a person asks, I'm playing my nurses, but you know yourselves. If a person is saying you are buying a property together, your name should also appear on that title deed. It should start with the offer to purchase. Your name should be there on that offer to purchase so that it can be transferred. You should sign every document the same as the person that you're buying with. Don't let someone say they're buying a property with you and then only to find that the offer to purchase and the title deed only shows their names.
Yeah.
I just want to say thank you, Bev. Any other words
thank
of
you,
wisdom
Rose.
that you might want to leave us with?
I just want to say that at the moment, around the world,
Yes.
all right, there's a lot of uncertainty. But South Africa, I'm getting goosebumps now. Okay.
Yes.
I just feel we're in the right place.
Okay.
Okay. So for me, I can't say it's not a risk buying here in South Africa, but I just love. I'm going to be here forever. I love South Africa. And you know what? If you're going to buy a house somewhere, then
Why not South
because
Africa?
you know what, property, you've got investments of all types. You know, property goes up.
Yes.
It might be a bit like the Himalayas, you know,
Yes.
but it will do this. You know,
Yeah.
and let's face it, other markets at the moment are very volatile. I think property's a little bit more stable,
Okay.
you know?
Yeah.
And when you're paying off your own property, it's like a forced way of saving, isn't it?
Yeah. Yes.
You know, you're paying for your own.
Yeah.
So if you want to sell, then you sell, but you've made a profit,
Yeah.
you know?
And you've traveled quite a bit. I don't know if you're comfortable with me sharing that. You've traveled quite a bit. You've been
Yeah.
traveling for the past year, and yet you're still here in South Africa. You've decided, you know what, I'm going to travel, but at the end of it all, I'm going to come back home and I'm going to settle there.
Rose, I've been traveling a lot because my partner's been working out the country.
Yeah.
The best thing lockdown and COVID did was that I can work online and I can help, you know, I help anybody from anywhere in the world.
Yeah.
And we transmit everything through online, so it's absolutely not a problem.
What I appreciate about a lot of travelers, a lot of traveling South Africans, is that they compare South Africa to the rest of the world, and they still come back and they say, ooh, we have the best country in the world. Thank you again, Bev. We are
Thank you,
here at
Rose.
the Master Builders Association, the Cafe Indaba. If you felt any noises or not, that's because we're having fun and people are working and making coffee. You can come by and have your coffee as well, or talk to me about property. Maybe we'll have you next time sitting right in front of me. But that's if you have 40 years of experience, 20 years of experience in something property related, like Bev here. Thank you so much for your time, Bev. Appreciate it.
Thank you, Rose. Thank you.